I come to you first, Vatsal, for a quick recap of what really panned out. Terra Luna, stable coin, completely destabilizing the crypto world, moving from 118 to 0. Now, this was not what the promise of cryptocurrencies was to investors all across the world and particularly in India.
Yeah, yesterday, actually the last week has been pretty wild. Just for some context, Terra Luna, the whole project was around the concept of building a stable coin, right? UST was the stable coin pegged to a dollar, which means one UST will always be equal to $1. And it was not really backed by any actual fiat currency. It was algorithmically stable, right? What that means is they had mechanisms, in their algorithm which allowed them to maintain that dollar peg. That typically happened by allowing one USD to always be exchanged for $1 of Luna, which is the other coin, right? Typically, they expected people to, find arbitrage whenever the value or the peg of USD, moved, and leverage that arbitrage to bring it to a dollar.
Vatsal, right? I'm interrupting you. And the reason I'm interrupting is I want to keep this simple for a vast majority of investors, especially the millennials. They didn't know of all of this technicality, and it takes time to understand that it is UST and not USD. All of these dollar pegs, pretty much artificial. Janet Yellen herself has called it out. Very simple question. Why did something get wiped off the face of this earth? If crypto was an asset and it was even called a stable coin, please understand for the general viewer, how has it disappeared?
I guess the simplistic way of putting this would be a bank run.
Okay.
Just it created panic. Once it depegged the first time, while the LFG, which is the foundation, which is like a central bank for the whole Terra Luna ecosystem, tried to bring it up before they could. Lot of panic in the ecosystem, lot of shorting, lot of selling, which flooded the whole marketplace, and just it became a death spiral and just crashed. And that
a death spiral. Hold that thought there. A death spiral. Let's take that point up. Sharat Chandra, a death spiral, a bank run, loss of confidence. This wasn't something that was supposed to happen at least a few months earlier, before the crypto stories started souring. And if I may also add here, this was precisely what the Indian authorities seem to have been warning off record and on record. Sharat Chandra.
Yeah, so I think we have to make a clear distinction between the stable coin, what we're discussing here. There are two types of stable coins. One is collateralized, as in backed by certain assets, like say USDC, which is backed by the US dollar reserves. So similarly, in case of non-collateralized or algorithmic stable coins, because there's no underlying asset backing these stable coins, so they are more prone to bank runs or more prone to redemption risk. And what happened here is there was an algorithm which was determining the supply, and again the price was linked to that. And since this is not the first time a stable coin has failed, if you look at the recent past, 2 years ago, the same founder, Do Kwon, was also involved with a stable coin called Basis Cash, and it also failed. And last year, Mark Cuban, one of the prominent investors at Shark Tank, he also lost a fortune in another stable coin called IRE. It was also an algorithmic stable coin. So we have to be clear about the stable coins with respect to assets. So they are asset-backed stable coins and algorithmic stable coins.